Good afternoon. I'm Mike Phillips, and I'm one of the financial planners here at HJP. The presentation today with myself and our MD, Greg Watt. Here at HJP, for the right client scenario, we are huge fans of using cash flow reporting. A cash flow plan can help you visualize your financial future. I hear you asking, what is cash flow? Quite simply, it is money's in and money's out, or income versus expenses. The cash flow charting voyant you'll see later on analyzes current and projected future needs, goals and aspirations, and assesses the likelihood of being able to achieve these year on year throughout your lifetime or lifetimes. But why is it so important? Essentially, we believe that a visual projection of your financial future will help to inform and engage you in answering the three vital questions that matter most to the financial well-being of you and of your family. Firstly, will we be all right? So, can we afford our desired lifestyle now and throughout our lifetimes? What can we do now, and what might we need to do in the future to secure this? The second question, building goals. As can we afford to, for example? So, can we afford to enjoy that special holiday, pay for our daughter's wedding, retire earlier, move house when we retire, or actually give some of our wealth away now or in the future? And thirdly, what happens if one of us dies early, one of us is ill and cannot work anymore? We need long-term care, or our investments perform better or worse than expected, or finally, we get an unexpected windfall. Cash flow analysis brings to life visually all these issues and enables us to model different scenarios to address them with you. The plan that we make will be your plan, and we'll build this together to allow you to picture certain future scenarios. Although we control the cash flow plan tool, everything is built together, and all of your future reviews can be based around the progress of the plan that we have built together. As well as the plan looking at where things are today, we can also add in various different scenarios to help you visualize a change that you might be planning for. The idea of the cash flow plan is to give you confidence in your financial future. The system itself uses credible, realistic assumptions to give you an outcome that will hopefully give you peace of mind. As you'll see in a couple of minutes, in its simplest form, the chart will track everything for you and give you a year-by-year picture, with blue bars being good and red bars being bad. Simply, blue is good and red is bad. This will allow you to look at different scenarios to help you visualize the impact of your financial choices. The question we get asked the most will be, when can I retire? The question we always ask back is, how much do you need or how much do you want in retirement? Therefore, the most important part of everything that we do is to understand the full details of your current financial position. We will carry out a full financial review, looking at everything from income and expenses, as well as assets and debts. It's important that under the expenses category, we try and split the essential spend from the luxury spend or discretionary spend. It's also good to understand that if a change is coming shortly, what will that change have on any expenses, positive or negative? As I said, it's important we get the full correct picture of where you are now. Otherwise, the old adage of rubbish in, rubbish out, I'm afraid will prevail. Carrying out the review will allow us to identify money that will allow you to do more of what you truly enjoy. Also, in times of market stress, like we've seen recently, a cash flow plan should give you peace of mind that the long-term outcome will be as you expect, allowing you to ignore any short-term noise. The plan I will now go through in a few minutes is a typical client in the early 60s. They've got a good level of income, a good savings base with a plan to retire within, say, 2 or 3 years' time. Although retirement does look very positive, having a plan in place that gives you that peace of mind is superb. As well as this plan, and many other plans that we do as well look positive, It's also good to know that if a plan cannot be achieved, you know this immediately, and what steps you can take, or you can make rather, to either make the plan work within your current thoughts, or how the plan should be adapted to ensure your goals are met, even if that means moving things further away than expected. Although this plan is just one example, we come across many varied situations, and I'm sure between Greg and I and the team at HJP, there's much we haven't seen. I'll pass you over to Greg as I run through the plan with you.
Thanks, Mike, and good afternoon, everybody. Thank you for your time today. So when we're looking at this cash flow forecasting, the first thing we need to do is build your base plan. So a snapshot of what the future might look like based on where you already are. So your current position. In order to do that, we need to input details of all your income, including any potentially future expecting income like state pensions, your current expenditure, your assets, and your debts. We then discuss with you about what sort of future lifestyle it is that you want to have and when you'd like it to start from. The plan will include assumptions about future investment returns, savings strategies, property prices, as well as inflation. And the result of this will tell us whether you're already on course to enjoy that future lifestyle you're hoping for. It's most important that we ensure this information is as accurate as possible. So let's have a look at some of the areas where we're inputting data. First of all, let's just look at the timeline. So Mike's very kindly got this up on screen. Now, this is where we start to put in the various events that you want to plan for in the future. So we look at any goals or ambitions you want to include and the value of those ambitions in today's terms. We add events to the future timeline based on the things you know or expect to have to pay for. So maybe you're planning to fund the kids through university, or you're going to build an extension or a loft conversion. And whatever that budget is for those events, we plan that in as well. Crucially, obviously, we put in your intended retirement age if you haven't already retired. As a matter of course, when we're building these forecasts, we automatically assume everybody is going to live to 100. So you can see from the right-hand side, the plan runs until the younger of a married couple, for example, might get to 100. So let's have a look at some of the input screens instead. So if we're looking now at expenses, now these can obviously look a bit frightening. Now, the reason that this looks potentially frightening is because we look at all the money going out year by year, but we base it on gross money coming in, pre-tax. So tax itself, income tax, is treated as an expense within the household. And we also assume that these expenses are going to rise each year in line with inflation. And the various colours relate to different types of expense. So next up, we'll have a look at the assets page. So the assets section is where we include everything you already have, from properties to special collections like art, classic cars, or musical instruments, as well as your existing investments, savings, and pension plans. And again, each color represents a different type of asset. Now, this can provide a very useful snapshot of the value of the wealth that you might be able to pass on to future generations when you do eventually pass away. The downside is that it can also highlight the potential size of your inheritance tax bill. Next up, let's look at taxes. The taxes section is a very interesting page. Obviously, part of our role in advising you during your retirement is to try to structure your income as tax efficiently as possible. This will ensure the plan and the money in the plan can last as long as possible. Now, unfortunately, taxes can't be avoided, but with careful planning, they can be limited to make sure you keep as much of the wealth you've built up as possible. So this brings us to the actual output then, the cash flow, the forecast of your future. And for me, this is obviously the most important page, the visible forecast. So the software takes each year in turn and the spending that you want to have in that year, and it works out where to get the money from to fund your desired lifestyle. And it will keep doing that year after year after year until the money either runs out or we get to your age 100. Now, if the money is forecast to run out, as Mike mentioned earlier, some red will appear on the chart. Now, that's a sign that there's not enough realizable money to fund every year's spending all the way through to 100. Once everyone's happy with this base plan, then we can start the real planning process. So depending on the result of this initial forecast, based on how things look, we can then start to play around with the details. We can basically add in any what-if scenarios you might like to explore. Do you want to downsize at some point in the future? How much could you give away to reduce your inheritance tax bill without running out of money yourself? Do you want to allow for buying a new car every 3 years? Pretty much any scenario you can contemplate, we can include in the forecast and see what the consequences might be to your own future. And I think Mike has an example available, which is obviously one of the more common questions we get, which relates to what happens if I now need to deal with long-term care. Now, in this scenario, we have assumed a significant increase in costs, which you can see from around about age 81 onwards, to cover those care fee costs. And as a result, you can see that a little bit of red has appeared at the end. So by the time we get to 99, you do run the risk of running out of money. And clearly, the function of this forecast is to give you that peace of mind that tells you whether you're on track, but also to allow you to take action to plan for any eventualities or any additional plans that you might want to factor in. So at that point, I'm going to hand back to Mike.
Lovely. Thank you, Greg. That was actually really all we wanted to talk about today, really. If you've got any questions, there's actually a questions bar at the bottom of the screen. You can ask questions down there if you wanted to. Obviously, if not, I don't think anything's come through from anybody just yet, which is absolutely fine. Just double check that. No, that's fine. Nothing through. So I'll leave it a minute in case you've got any questions which you want to ask of Greg or I. Also, if not, please do feel free to flag the questions with your HJP advisor, or if not, you can email us afterwards around the question you may have. So I'll give it another minute just in case something comes through. Just double check. Doesn't appear to be any, so we'll leave it there then. So again, just want to say thank you much indeed for joining us this afternoon. I hope it's given you some food for thought, and we'll speak to you soon, I'm sure. All the best. Enjoy your afternoon. Take care. Bye-bye.
Bye all.